All right, time to answer your questions. First up, Steve Weiss from John asked the desk what they think of PetCo's report and the future. All right, I'm asking you.
Well, look, I own a couple of dogs, no Porsches, but a dog, and you spend a lot of money on them. And with the pandemic, you can't even adopt a dog because so many people have. So I think that's a great thing. However, this is a retailer, and it's taken them a long time to grow into the valuation they have. So the momentum will be there, but I'm not a buyer of this. There are other retailers that I'd much rather own.
Okay, Pete, for you, it's a video question.
Halftime, it's Sal from Sayville, New York. I'm looking to position myself for the future of legalized gambling and also a reopening play on the casinos. I currently own DraftKings, MGM, and Fox, which has the Fox Bet platform. And I'm looking to get a little more exposure with Round Hill Gaming, BETZ. I'm wondering if you guys recommend having that ETF as part of my portfolio moving forward. Best 60 minutes on TV.
Well, I appreciate that, Sal. And the question, of course, Pete, what's the answer for Sal?
Yeah, thanks a lot, Sal. Really appreciate that. That whole everything was great. I would say this. I'm not a huge ETF fan, and my reasoning is I like better beta. I want something to move at a much different pace than what you're generally going to get out of most ETFs. So because of that, I would just increase my exposure in one other casino-type play. Maybe it's Penn Gaming. Maybe it's Wynn, whatever. But that's the way I would approach it rather than going the ETF route.
Okay, good stuff again. Thank you very much for the question. All right, Digas, to you. Giuseppe in Italy. Ciao, guys. Love the show. Watch it every day. As travel exposure, how do you see Airbnb, which I own, versus more classic hotel chains like Marriott for the long term? You talked about a hotel chain you owned earlier, but what about Airbnb, Digas?
Yeah, so Airbnb is a disruptor. It went public in 2020, and what we're seeing is a new company. It has nothing to gain from the status quo of the hotel industry. Whereas Marriott was the one she referred to is a company and an industry that may be being disrupted. So I would say if you're looking at these two, it's a young company, go with Airbnb.
Airbnb. Okay, that's the call there. All right, Amy, lastly to you, Joan in Chicago, any advice on Fiverr? You own it.
Sure. Fiverr's been the gift that just keeps giving. It's been an incredible stock. Even though it's pulled back 30% from its highs, it's still up 14, 15% year to date and up over 800% last year in the last 52 weeks. So it's been a great stock. The freelance market is still very fragmented. Fiverr has the opportunity to be the winner here and consolidate it. It's a $7.7 billion market cap company. So in terms of the opportunity, we think it could grow, but there's no way to justify the valuation right now, and it could get caught up in just this macro rate move, being one of the stocks that I talked about earlier that just benefited from lower discount rates and is going to run into some valuation headwinds as rates go up. So I take a small position if you don't have any, and potentially wait for better entry points.